Investors reacted with enthusiasm to the government's $250 billion plan to buy stock in private banks. But the enthusiasm was tempered with bouts of profit-taking. President Bush says the announcement that the government will buy shares in the nation's leading banks was not intended to take over the free market, but to preserve it. According to one analyst, the move was uncharacteristic, coming from a Republican administration.
Very unusual, obviously, for the federal government to be owning a stake in a publicly held bank or publicly held institution of any kind. It's essentially unprecedented. It's just not the Republican way. I mean, in its most critical argument, you're talking about something approaching socialism.
Investors are hoping the extraordinary steps by governments across the globe will help resuscitate the stagnant credit markets, particularly the LIBOR rate.
Because that's the rate that banks borrow to one another. Like, I'll give you an example. The Fed fund rate was, well, this is going back 2 weeks, was 2%. The LIBOR rate in London, which is where they do all their marketing, was 11%. So banks don't want to borrow at 11%. That's insane, because then your mortgages are up ridiculously. So, I mean, overall, that's a very important rate, because the banks will not pay up. They just will move. The credit's frozen at that rate.
Stocks have been rebounding from a gruesome week that obliterated about $2.4 trillion in shareholder wealth. The Dow remains 33.7% below its October 9, 2007 record close of 14,164.53 and could fluctuate around these levels for some time. Ed Donahue, The Associated Press.